welcome everybody to the stream. Hello and welcome for Monday. We are excited to get this week started right, yeah? And when we have a green market, that's usually good for most of you out there. Of course, there will be a few bears that are trying to short it at the moment, but it's been a rip rally for the last couple of sessions, and boy, oh boy, it's still heating up. Just a quick rundown of what we'll be covering today and what we'll be learning today. We'll obviously be covering off on the stock markets around the world, some of the key macro environment stuff that we're looking at. Be looking through metals. We'll go through crypto. And as usual, we'll finish up with the live market open. So we'll find out what's going on there. How's everyone going today? Feeling good? You ready for a week that is going into a public holiday in the US? Traditionally, good weeks happen through these times. What do you guys think? Bull or bear? Put it in the comments right now. And by the way, of course, smash that like button if you're feeling really happy for Monday. Don't be Garfield, yeah? Massive echo on YouTube? Really? Is this true? Should be pretty good. If audio is okay, that'd be fantastic. We're getting some responses coming in here. Most of you seem to be bullish, not bearish at this stage. Let's go through some of the markets, and we'll start off here with the SPX. Obviously, we'll look at the gaps. We'll look at what I've got from the top down here. Let's go to the weekly to start off with. We always like to really do weekly into pretty much, or actually you should start really monthly. So we'll do monthly first. So month is about to close. We're only got a few more days. Obviously, we'll close up the monthly on the Thursday session here. And at this stage, we've had one rebalance kind of buy with Doji, and we've had a little bit of a pickup, well, actually a significant pickup here with the bullishness. I'm going to remove this as well, so it's just a little bit easier for you guys to see. So is this selling over? I'm not too sure if it is. And I think that's one of the big problems. It's where does it short? Not so much will it short. It probably will have another go and another turnaround. That's the nature of markets. There are a few bull cases we'll look at, but the first one I want to talk about from the bear side is this weekly into daily trends. So the trend has been currently down fairly substantially here for the last couple of sessions. Obviously, this comes from the 4,600 to the last point of just above 4,400. To, of course, the famous one that happened recently with that epic sell-off that we saw, which was very aggressive towards the 40.88. You know what my concern is here, guys? It's really about the fact that Wall Street aren't closing as many shorts as I thought they would be. So they're actually kind of adding to their shorts. Now, if that happens again, I'll be the first to let you guys know. Make sure you subscribe, because on the weekend video, I'm not kidding, this weekend video coming up could be pivotal to our understanding of how the markets are positioning moving forward. So stay tuned for that. We didn't really get that much clarity in some of the last reports, the disclosures, but I have a feeling that we may get a lot of clarity in the disclosures moving forward. And I will be letting you guys know what I think about that. Downward trend, though, this would make sense. Where's the gap? So we want to always know where our gaps are, and gaps are left behind. So right now we've got one here. Let's just think about it. We've got the island reversal, strong pattern. Look for island reversals on stocks. It can be very, very successful trading strategy. Island reversals, the strategy concept, we'll do a bit of education here on it, is basically around this principle. If we have a market going down, let's say it's going down, then it gaps. Then it starts to consolidate like this. Okay. Then it gaps up. What's that kind of telling us about the market? Well, the market gapped down for a reason. Potential fear. Yeah. Potential fear, some reason it gapped down. Then it consolidated and then it gapped back up. What could that be? Well, in this case, it could be a potential bit of FOMO. Maybe it's jumping out of the gates. Maybe it oversold. Look at the left-hand side story coming into this event as well. Capitulation, fear, oversold, all those types of things. But we now have left a gap down here. We've got the island reversal. We've left a gap here. Important to note. And we have one last one that's sitting here. Obviously, there's more gaps all over the place. And a lot of you will say, well, gaps, that's a stupid strategy. Gaps are kind of stupid. But yeah, unfortunately, we need to pay attention to them because while not everyone fills, a large statistical chance of them fill in the first month. I think we had the stat on it. It was something around 70+% fill. So because we know so many filling, that's a huge portion of it. A few people are saying that I'm really, really loud. Is this true? I can pull it back. Shouldn't be really loud. Michigan Dirt Bike Trail Review says, I sold all my stocks at Friday close. Would I want to go back in or wait and watch? Usually you want to wait for those types of things. So the concept would be maybe to fill this gap, make it through, and then we get to this level and we look for the potential of the nasty bear coming back in. This could be where Wall Street say, you know what, enough's enough. The other chance is that we even bust through this level and then instantly reject it. So I think for a lot of bulls, they'll be getting cautious here and they'll start saying, okay, maybe I want to start locking in a little bit of the profits because how much have we come off the bottom? Off the direct bottom down here, we'll be opening up around this point here. So we're up 8%. Once we get up to about 10% up, if that does occur, you filled the gap, you've got to the trend line, you've got to 4,000 psychological number, maybe just underneath that. A lot of case scenarios where it could turn around. So what do you guys think? Do you think it'll fill this gap? I have a suspicion it will try. At this stage, there's no real reason for us to say it can't do so because the market is still quite bullish. So these are the gaps we're looking at. This is kind of the bear case for this week. The potential here is the pullback into this market here, clean up this zone, look for bull case scenarios here if we haven't reached this yet. So let's say we turned today and started coming down. This is where I think the bull buyers will come back in. So look for this gap range here. Now you might say, well, what about this Monday? Can we find anything? It's going to get tough. Let's look at the small markets. I don't like the market as much in this middle zone. I think it makes it very, very tough to trade. And it's incredibly difficult when you're in the middle of nowhere. And that's effectively where we are here coming into the session for this particular pair. There's other pairs that are really interesting, but this one is a little bit of middle of nowhere. Little bit of a trend line here. Let me just draw that using actual real line. Here we go. So there's a little bit of a trend line here sloping up in the futures market action. Does it mean that much? Not really. We've got a series of higher lows and higher peaks also appearing. Again, has that even broken? Maybe some bears will be looking for it to get underneath this zone. So I'll quickly highlight that for everyone so we can see it. Moving into the session, that will be pretty important. Underneath 39.08 might be a little bit of a switcheroo. So something like this comes back up, moves down, and then at that point, maybe we see some epic shorting. That's a case scenario. Yeah, it could happen. I don't love that trade. I really prefer the bull side here just to hopefully get that continuation and then to come and hit that up ideally around this zone later on this week, maybe even the Tuesday session. I would rather have a rip here, another 2% up. I know that sounds crazy, but that's what we want. And then we get to a point that we can make better decisions. I've written some words up here, and I hope a lot of you listen to this concept. And this is because I've been teaching it in my one-on-ones. I've been teaching it in my group mentoring. And it's really making a difference. And I think that's really important if you think about your trading. And that is patience, try to react, try not to predict. So what I mean by that is obviously we could say could go here or could go here. And you say, well, that's not useful. You're an idiot. And that's fair enough. You could say that to me. That's all right. You could say, well, come on, man. Do you not trade every day? I would say if you have the patience and you can react, you react in areas that you believe you will have a higher probability chance of making a better decision. After all, you don't work in McDonald's for minimum wage, for no reason. You don't want to keep stealing those cheeseburgers. That's not what you want to do. We don't want to steal the cheeseburgers from McDonald's. Mayor McCheese will be sad. If you don't know who that is, look him up. We want to be here making sure we're making cheeseburgers. We're making Big Macs. So ideally, we're making successful trades, not just random pot shot, coin flip tosses. That's not what you want to be doing. So try to think about that in the next way you go into a market. Have you reacted? Have you predicted? Are you just having a guess? Is it a gut feeling? Gut's not good. That's probably not going to work out for you. And that's why some days are better than others. And I've explained this to many people, but hopefully that makes sense. Does it make sense to you guys? What do you think? Outback, appreciate that. Appreciate that very much. Thanks very much, Monica. Appreciate that one as well. So jumping into the market right now is not necessarily the best concept. I didn't see compelling evidence that Wall Street wasn't potentially setting up for another nasty attack on us at some point over the next couple of weeks. So be just careful there. Let's look at some other environments. Let's look at the US 10-year. A few people are mentioning this is going up. Absolutely it is. At the moment, the US 10-year's turned. So that's now 2 days up. So remember, let's go back and do a little bit of a history lesson on how we got caned if you were all bullish and didn't have stop losses only a few weeks ago. Well, one of the ways you got caned was the 10-year went up. I'm actually going to compare this. We'll use the 2-year because it's the easiest one. Let's load the SPX above this and do a bit of a lesson in how the 2-year is really punishing, or the 10-year is punishing the stock market. So notice here we have a recovery. So the 2-year starts to go down. It goes down, 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 down. Then we end up getting nice little rally. Oh, hello there. Very nice little rally. And then the 2-year starts going up, 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 up. And at the same time, Wall Street's actually adding massive shorts. At the same time, we get that coiling action. But we were actually going up while the 2-year was going up. And it turned out bad. Okay. At this point, what's happening? Well, the 2-year really needs to turn down. We've currently got the beginnings of what looks like a potential downtrend here on the 2-year. But we do need it to turn down because it has got a shock factor that's coming through into this market. It's like if it keeps going up and the market goes up, every day that happens, I become more and more and more scared of this market turning around and flipping on us and then moving to the downside. Obviously, we don't have to be scared because if you're trading, you're just looking for the price action to confirm that move. But, you know, if we're sitting back at here and we're seeing the market back at 4,000, 4,020, should we be worried, guys? I think we should. That would be a little bit scary. Let's not beat around the bush. That's not cool. We don't want that. So, yeah. Michael H says, well, now I want McDonald's. Thanks a lot. Well, if McDonald's are interested in selling me a franchise, I will buy it. If anyone's ever seen a balance sheet of a McDonald's franchise, whoo, not bad, especially in Australia. They call it Macca's over here, guys. It's called Macca's, Mackie D's or whatever they have. But yeah, here's the S&P 500 versus the US 2-year. And I think it's compelling that if we keep going up and the 2-year goes up, it's not going to necessarily end that well. Let's now move over to the next chart I wanted to bring up, which was based on a tweet that I actually made today. And I'm pretty disappointed in the overall movements here. It doesn't work, guys. So there's a great little comment here. And this is, so I said they banned gold at the G7 meeting. Again, history shows this stuff doesn't work. It's stupid. It doesn't work. It doesn't work. So Rich here says they banned oil and it went up, benefiting China and Russia, certainly, and hurt the US and the EU. Yeah. And basically, yes, that is what is exactly happening here. If we keep doing these sanctions, it doesn't tend to work out very well for anything. Now, what initially happens is we saw gold do a little bit of a ramp. And a lot of retail traders, what are they going to do? Well, they're going to read the news and they're going to say, oh, it's a great time to buy gold. Let's buy gold. Let's buy gold. Of course, since that point, since that spread, what's it done? It's pulled back. Now, I am bullish gold, don't get me wrong, but we actually haven't quite filled the gap that we left this morning. So this is going to be an interesting point. At the moment, you look at this chart and you think, oh, doesn't look very good. We've got our zone that's defended from the buyers. So if we get switches down here, obviously we turn to the bullish side. If we get underneath here though, well, where are we going? Probably 1810. So news, it's kind of what I want to say was it's proof of when we get this news coming through, It's always bad. It's like, just don't look at the news. It will not help you in your trading. It will give you a bias that ends up destroying your scalping methodology. Think about another thing. I'm going to use the dollar index here. So anyway, gold, pretty much this area here, possible, movement up. I don't really like it strongly, heavily until it gets past 1846. And if it breaches underneath this level, don't try to catch the falling knife, because it's going to chunk some big levels, I would say, after that. And you could be down $10 like this. So gold, little bit of sneaky news trading on this. Another thing that might happen is if we breach 1840 now for this session, because of these wicks, what's probably sitting behind here is orders. So that would be a good supply break. So I feel like if we did end up reversing through the session and you get through there, this most likely will fall, as in it will keep going and will break through. I would love that if it happened. But yeah, it just shows the news comes out, initial bullet bear down. Everyone gets bullish again during the London session, the European session, and then it bears down against them. And they think, what just happened? How did that happen? We'll use the dollar index to kind of explain the same concept. So if you've been looking at the US dollar, very strong, very, very strong. Again, let's use the US 2-year to overlay on top of it. Because if people don't know, DXY obviously will be dictated to by a little bit by the 2-year. Now, it's not going to be easy for you to see this, unfortunately. Let's just go to a daily time frame here. And what you'll notice if we go out back to, oh geez, let me see if I actually get this thing set up on 2 hour maybe. Okay, that's not really going to work because of the huge percentage moves. But anyway, if you actually overlay a 2-year, what happens is as the 2 years going up, initially the US dollar basically starts moving pretty heavily with it. So the US dollar starts going up. So if we think about 2-year, just remember these dates. Let's say September 21, it started ramping. Yeah, September 21, fair enough. Let's now quickly remove this. And we'll go over here and we'll think about September 21. So let's go back to the daily. Okay, so September 21, we breach a double bottom pattern here on the US dollar. Same time as the US 2-year starts going up. Now, US 2-year suddenly sitting at 3% or 3.1%. The Fed is going to continuously raise rates. But if the US 2-year comes down, here's a bit of chat for everybody. Let's see if the chat gets this right. Let's see if you guys get this right. If the US 2-year starts coming down, yet the Fed is still raising rates. So let's say the Fed raises 50 basis points, but the US 2-year goes down 0.3%. What's going to happen to the dollar index, do you think? Put DXY over the 2-year? Probably a smart idea there, yeah? Good work. What do you think would happen if the Fed raises 50 basis points, but the 2-year still comes down 30 basis points? See, a lot of you are going to say, oh, the dollar index is going to go up. Well, generally speaking, the dollar index isn't going to follow the Fed. It's going to follow the 2-year rate. It's going to follow the market. It's already pricing in a lot of these rates. So when it's like that buy the rumor, sell the fact kind of concept, yeah? So what the news and what you hear has already been packed in a lot of the times, and the market is already so many steps ahead of you. So yeah, that's a big thing here. That's a huge component of what's been happening in this market for the last 2 years with retail community. Unfortunately, we've been in a market that's so bullish and so crazy that people have gotten away with crazy earnings, with, oh, this stock's worth $1 million, all these types of things. And it gets you into a bad mindset. So just remember, think about things a little bit more objectively. Just because you think it's going to happen and then it goes off in the opposite direction, ask yourself, critically think about that market. So US dollar anyway, for this week, currently is technically bearish on the 1 hour. I can show you why. The reasoning, this area here, really. Once that breached low, it became technically 1 hour down. Now, until until it breaches at this point, probably around here, you're kind of in a stagnant kind of downward market on the US dollar. If the US dollar continues to go up, watch out as well for the stock market, because if that keeps happening, it could be showing us that there's a bit of dumping going on in the funds after the rotation we saw last week. So remember, funds have rotated, they've done their rotation, they're doing it. Once they clear, if they want to sell, let's say, stocks back to retail as retail FOMO them up, then that could be seeing and manifesting a little bit in the dollar index. Gold finding demand on the lower time frames? I hope so. I actually think it will go up. I actually think it will go up over the next few weeks. I hope so anyway, because that's the current price action that we're seeing. But I just wanted to show the news comes out, gaps up, everyone buys, they all get crushed, then suddenly it might do a turn. TLT down, of course, VIX up, which means fear is up coming into the session, still very high, 28.27. This is nowhere near the drop that we've seen more significantly in previous times. Whenever the VIX is above here, anything's still on. I mean, we've had 35. 35 has been a very good level to us, as we've talked about. And the market coming back down to the 25 would be what I'd expect. Now, if we bounce off the 25, maybe the 25 is a bit of a trigger. Possibly we hit 4,000, we hit 39.90, something like that on the SPY. And then we actually trigger that short, and the VIX actually then starts to jump back up. So VIX traders will probably be watching the 25 very closely. That'll be massive. Permit Fisher coming in with $4.99 donation. Thank you very much, Permit Fisher. When I get over to the US, I'll have to meet you and many more of the community. Hopefully you're doing well and you've caught some big fish, as in market fish, yeah? Thanks for the $4.99, man. So markets, again, for anyone that's joining us, they're green at the moment. We have the expectation that at the moment, the trend is still up. Obviously, we've boxed it already. We'll rebox it soon. We've talked about some of the lead indicators. Copper is up here a little bit today, still very negative. You can see this huge negativity. Maybe the copper market goes like this and again then dumps. That would be negative to the market overall. So watch copper, guys. It's Wyckoff to the downside. Not necessarily a great reading here for the economy. Usually very bad for some of the stock markets, sometimes the ASX 200, which is the Australian stock market, the FTSE, and even the DAX usually underperform in these types of markets over the US. Usually it is a movement towards technology that we end up seeing. And that has been the rotation now for a few weeks. We spoke about it, I would say 2 weeks ago, the heavy rotation that I believed was occurring into the Nasdaq. And that's why you see when you look at the Nasdaq on the chart, the relative better performance in the technology stocks compared to the SPY. The SP500 hasn't done as well as the technology stocks have in terms of recovery. Now, I know it's all things relative. You say, well, it doesn't really matter. It's still down. Yep, but it's still relatively better off. Outback, you've got to look at the iron ore price. So if you want to know those particular, you would look at iron ore. So you'd look at these, and usually there'll be some type of bullish movement or something in iron ore price. Plus, they've been oversold heavily. Biotech is improving. Yeah. Well, that's right. Let's bring up the sectors here. Percentage change. If we go to the 10-day, you'll notice biotech 6.16%. I mean, I think that's the best sector. And by the way, you guys got this right last week. A few people were mentioning the biotechnology sector was firing. And I think the two sectors that we found was biotech and the other one was hypermarkets, if I believe I was right. So yeah, very strong 5-day as well from bio. You'll know still one of the darker green ones. And then we go to percentage change on the last session. A little bit weaker here in terms of the last session, but still incredibly good over that rotation. And that's because both of these just were so far ahead of the rest of the market. And then we saw the catch up kind of service from some of the other sectors. So well done to that. If you're looking at the 10-day overall, semiconductors still down heavily, 8.22. A lot of people are saying this is an untouchable sector at the moment. Oh, I don't know. I guess I know why it's down. This is the supply shock constraint issue. There's so much geopolitical tension in this one. What do you guys think? Do you think the semiconductors are good right now or bad? The market doesn't like them as much. What's the Twitter handle? At FX Evolution. It's up the top right, Basant. So you can check that out. If you want to follow us on Twitter, at FX Evolution. Thank you very much. So yeah, semiconductors down, obviously integrated oil and gas down, all these sectors not doing too well. Bio has been just one of the better ones, but that's the 10-day. The 5 days a little bit different here, and we've got a little bit of a different movement. Application software has done quite well. Internet and direct marketing retail, there've been some really strong sectors, but semis overall still playing catch up. Let's actually have a look at the semiconductor sector. We use the VanEck one, SMH. Look at that. It's just so crappy. It's very disappointing recovery. This usually is the sector that canes it during recovery and does the best. So the supply issues here really catching up with it still. Even the volume's down quite heavily. Crypto isn't confirming risk on either. That's correct. Crypto is not really confirming that. We'll have a look at crypto in just a second. So yeah, semiconductors, look, possibly this is if you believe there's more rally here, this is actually the one that's further behind the rest. So we're in the Nasdaq, we're effectively around here already. So that would mean that percentage of recovery, we're about 6+% behind in semiconductors. It doesn't look bad on these charts. Let's have a look at NVIDIA. Check out NVIDIA coming into today's session, up only 0.67. Again, breached out here on the Friday into the little bit of supply. It's going to open above that, still behind a little bit, probably equal with the SPY, but behind some of the other tech. And this is, again, usually the one that rips the most. Big Friday session, but still very, very crappy. What is risk on, says Christian? So risk on basically means that the market is willing to take growth stocks. And risk on also means willing to take, well, risk on means two things. It either means willing to take like actual stock, so buying stock usually is a riskier asset than, let's say, the other assets out there like cash. So that's risk on. And then there's another way to say like risk on which means basically growth. So at the moment, the market loves, whenever you hear the word risk on, it generally means growth stocks are on fire, or at least growth stocks are being the ones that pick up. So market is rotating into those. Michigan Dirt Bike and Trail says crypto is retail driven and retail have no cash. A lot of people got liquidated. You saw that Korean number. It was bad. Like Koreans got mauled in the recent fall in the US stocks. And they're heavily in crypto. If anyone's from South Korea, if you're in the chat, what are your friends telling you? Are people getting destroyed in some of the leverage in the crypto markets and stock markets? I saw the liquidation numbers. I shared them with you. It wasn't great. Diamond Eye says looks correlated with BTC and US 500. Jeff R says, great. Well, I guess he's saying, well said. Trading is waiting, trading. I like to think of it like a praying mantis or one of those like spiders that just sits there in its web. And then eventually you see a tasty morsel, bang, you get it. Yeah. Unfortunately, yes, the reality of trading is it is boring. You set alerts, you come hang out in the chat channels and have a bit of fun or whatever to make it a little bit less boring, but you must be patient. Let's have a look at Bitcoin here and check it out. Very lackluster in terms of what it's doing. I really have very little opinion on this price. I know you guys want me to have an opinion, but geez, I tell you what, isn't that just really a guess level? It's not a break above here. It's not the low, which we posted, on Twitter. I talked about that 17,000 to 17.5 many times. The reason we got that, by the way, if you want to know how you got 17.5, is when you go out, you'll notice there's this little low that formed just here. And that turned out to be the little low. Now, I'm not saying that's the absolute gospel kind of level, but it was a pretty good little solid, if you noticed, pick up. So there'd be a few orders that would have sat there in the past. Nice swing, two really good rejection candles here, very little solid area. And that's where the Bitcoin came off recently. But yeah, quite weak still. Ethereum here, it's had a bit better run. So Ethereum, the alt's actually picking up slightly better again at resistance. So struggling at this little level. Comparatively, though, doing better than Bitcoin because it fell harder. But yeah, it's doing better. So critical zone here for Ethereum. Let's check ETH versus BTC ratio. We will get back to the other market very, very soon, guys. 1 second. I think it should load. ETH versus BTC ratio. Yeah, so Ethereum is outperforming Bitcoin in the last couple of days, last couple of sessions. You can see here the breakout, little bit better performance of Ethereum in this recovery. Retail still has cash. The stats would say yes. Michigan says, Tom, what's your ratio of cash equities? No, probably about 20% cash. Michael H says he missed Chewy. Yep. Do we have any South Koreans here? I'm interested. Not getting too much feedback unless someone mentioned it. Good morning, Donkin Dave. Good to have you here. Okay, so yeah, Bitcoin, middle of nowhere land. Doesn't look strong, doesn't look weak. Ethereum doing a little bit better. The market is not that interesting in crypto just yet. I think it will be, though. Look up the halving. I can bring it on. I guess I will. Let's just do a quick lesson in the halving. Even though most of you won't believe in it anymore, hey, I do. So that's okay. I can give you my opinion. And considering I don't know that much in some things about crypto, let's just have a look here. So this is the original halving. Now, always ignore this ridiculousness. Okay, just scrap that. It's just ridiculous. Okay, so other than the prices being stupid, we have seen some weird similarities with some of the other markets. So you might say, oh, well, this didn't work. Well, you had the first rally. You had the second rally in 2012, and obviously you had the 2020 rally. Then you had the third little bit of a rally here, which actually marks these. So I would argue this is fairly decent. You cannot expect it to get to the same ratio. This was the fledgling version. The second one does, of course, worse, and then the rest and so on and so forth. So they actually all peaked off around that kind of 500 to 550 days after the halving. This is when it becomes harder to obviously mine crypto. Then it dropped. And what you'll notice is the drop and the cliff are actually, this is very similar in some ways to the 12 run. So just like here with the 12-16, we get the initial one in the 12, in the 16. So the 12-16 here, that's the initial run. We get the 20 into the same as the 12. Then we have the double tap to the high, which is actually the same as the 12. Remember, that's the same as the 12 here. And then we have the fall off the cliff, which is the same as what happened in 2012. And then we start to sideways for a bit. And all of them had that run kind of coming off that 950 days. So this is not a trading technique on Bitcoin, but if you have faith in it, and I like to say when everyone else hates everything, I sometimes like to think it's good. And I don't think we've found the low yet of crypto. But yeah, if it keeps dropping off a cliff, somewhere in here, this next 150 days is going to be pivotal. And that's a long time, I know, for some people, but I think it will be incredibly pivotal for crypto. And if it finds base similar to this, could be interesting. What do you guys think in the chat, though? A lot of you are just going to say crypto crap, but some of you will say it's yeah, maybe. I mean, hey, I'm not discounting it. You can't discount the two big ones anyway until I'm proven otherwise or somebody else. I'm not believing in Michael Saylor necessarily, but I do go with at least that kind of thing. Now here's oil. Let's look at oil here before we get back over to stocks. And don't worry, we'll cover some of your favorites, Tesla, etc. Don't worry, we'll be into them soon. So US oil here, we have the previous distribution range, and oil just made a little sneaky high. So you'll notice it made a little sneaky high here. If it now comes down and makes a new low underneath here, I think oil will short. And the plan for something like this would basically be, technically it would go down, it would breach, it would pull back to around that 107. This is what I say about being patient. And at that point, I think shorters, or at least scalping shorters, would want to consider the market. The oil market is heavily geopolitical. Obviously, there's risks here involved in this type of market condition, but this would be that kind of turnaround story towards the short side. I'm still short oil, and I think that's a very interesting little candle there that just came through. And this is the kind of area where I expected it to make this high. I was kind of hoping for it. I'd like it to crush that now and then make a new low underneath here, rally a little bit, and then boom. That'd be a big deal. Obviously, oil incredibly risky for geopolitical reasons. Natural gas, I want to show you why it's called the Widowmaker. Everybody needs to pay attention to this one. Look, I've said this, you know, anybody in the chat will know I hated on natural gas and oil here. How long did I tell you for? 3-4 weeks? It's been the one consistent market I've said, you know what? I don't trust it at all. I do not trust these markets, and especially these particular ones. Yeah, I'd like to think we were relatively against the trend here. And the main reason they call it the Widowmaker is this reason, because of what it does in percentages. That's 36.24% basically wiped in 2 weeks. 36.24%. It is not a great pair to trade. Okay, be incredibly careful in these types of ones. And you see what happens. It all actually started here and here. When this happened, it showed me something sneaky was going on. And this type of bearish market kind of pullbacks, all this type of stuff usually predates or precursors horrible negativity in markets. So this is a big one here. But yeah, be careful in natural gas, guys. If you don't know what you're doing and you like natural gas, possibly stocks might be the better thing for you, because it's certainly not. The CFD can be incredibly dangerous. 36%. That's not even leverage. That's 36%. Let's take a look at Tesla. You guys want some Tesla. 737, pretty disappointing on the Friday session compared to the rest of the market. This level here being the 740, looks like we're going to get above that in early market session. I kind of see Tesla moving towards the 780, 790 zone. That's up here. So if we boxed it, I'd be looking for in this kind of area up here, ideally, and that to be the target for a lot of buyers. I think that will also correlate pretty well with a SP 500 being around that downward trend line. And that's really what's happening at the moment. Being a stock picker is very difficult at the moment because of the fear. How many of you have stopped stock picking and instead are just trading the index or the indices in general, like the SP 500, Nasdaq, Russell, Dow? I'm always interested to know whether a lot of you have stopped stock picking for now, but then you'll get back in. Now, that doesn't mean that you're not investing. I'm saying trading stocks. So investing in stocks is different. That's just you love the company, cheap price. All right, let's go. HODL, baby. Good. I like that idea. Very cool. Tesla is a clear W shape. Yep. So W shape, for anyone that doesn't know what that means, basically double bottom kind of concept. Here's the W. I'll draw it so everyone can see it. Even if it is a W shape or a double bottom or a consolidation or anything, it still has to clear this zone. So before it clears this zone, there's a chance that it also could come down, or it could even fake out here and come down. And that's reminiscent of what we saw on the S&P 500. So yeah, at this moment, it looks clear. Everybody probably sees that. There's no doubt that we've defined a nice bottom here. We've defined the potential here for resistance, but you don't know it's going through. And if the market goes through here, one thing will most likely be occurring at the same time. The S&P 500 will go through the downward trend. And then that changes everything. All of a sudden, we get through a downward trend. We start looking for further pullbacks and a potential here of a much more serious rally that could even push up into the 4400s. It's even possible we could still be in a bear market and we could be up that high. This is truly the year of the trader. I would not be surprised if we don't print another low later on this year. Tom, can you have a look at AMD Nvidia? Thanks. Give the guy give it a like. Thank you very much. Is Michael Burry still very short Tesla? I thought he lost that position. Anyone confirm whether Michael Burry is still? Most of you, it sounds like you're scalping indices, picking less stock, all of that type of stuff, which sounds pretty good. What are your go-to indicators? Generally, volume is a really good one. If you're a real scalper, you can use VWAP, MACD, RSI, to a lesser degree, stochastic, and moving averages. Some of them are quite good. But if I was to go with go-to, I would say volume which is down here. I like volume a lot. You don't really need that many indicators. Once you understand what the indicator is going to tell you based on the price action, the indicators always tell you the same thing. You can see what they're doing. Yeah, I don't know about Burry and following his concepts. You don't know his time frame, his concept. Obviously, if you'd followed him all the way through 2020 into 21, he's obviously incredibly successful, more successful than me. But I always say with with people that get on television and say stuff, and they'll even admit it, I'm sure themselves. They don't know your time frame. They don't know when you're making a decision, and they're not aligned with your purposes. Retro Llama says $1.79. Thank you very much. Cool picture there, bro. Shorting on recession fears. Patience is harder. Yes, patience is the hardest part of this. Absolutely. Tom, can you have a look at Uber and some other things? Yeah, for sure. Burry is short Apple now, not short Tesla. Couldn't he just short ARK? Wouldn't that be the better one? He's long Meta, Google, and short Apple, but that was Q1. Okay. That kind of didn't really work, did it? Let's have a look now at AMD. AMD down all the way down here. Actually, nice breakout for this. Semiconductor, again, pretty lackluster in terms of the recovery path so far. Some people would say good W. 90 is going to be a bit of a problem for this. So it's about $3 off. It would be consistent with the idea that we have for the SPY here today, that maybe we get further rallies and stocks come into these levels. Breach of this, I would say pull back and then look towards the long. But I'm not trying to predict too many stocks at the moment because they're going to ultimately just move the way the SPY does. If the SPY shorts and the nasty market participants want to kill it, they're going to do so. And it doesn't matter how good your technical W is or any of those things. The SPY will control you. That is what it's doing. It is controlling. XBI has made a clear base, so that's a sector here. Biotech, yep, I agree. Biotech, we talked about it before. Credit, of course, where credit is due to some members of the community that made us spot this one last week in terms of rotation. Really nice base, wasn't it? Just that bang, that little hammer. Obviously, the big volume, which you know why that big volume's there anyway. The big volume that was here, that really stopped it. Why is that volume important? Huge amounts of transactions. Remember, Wyckoff's concept was that if you can spot nasty accumulation or nasty Wall Street getting into things, this is the type of thing you want to be looking at. And to put it in perspective, if we zoom this out, XBI, it is lower than the 2020 lows. It is so low that it is back in 2014. So you could have bought XBI in 2014 and you would have made no money. Well, now you would. You'd be up a couple of percent. But in general, you would be up 0%. If you ever want a proof that sometimes the wrong sector can get you in bad strife, there it is. Getting the right time, glorious. Getting the wrong time, not so good. So, yeah, I do like what you're seeing here on XBI, but it is in a resistance at this stage. Green week this week would make sense. We're going into everything has a W shape. That's right. Everything does have a W shape. Finken79 says, got to be careful with SARC, which is short arc. Oh, yeah, I wouldn't do that anymore. Any risk on rip is going to rip your face off. True. I would not short arc anymore. I'm just saying that would have been the easier short if you were trying to short last year. Any of the hyper stocks, if you have those types of big balances, that would have been probably the easier short. Yeah, Arcane, no, I wouldn't short that. Not with what you, again, here's the W shape, yeah? Joseph, $5. What do you think about the possibility of a market currently being in a correction, rally the rest of the year to new all-time high, then real crash next year? It's a great point, Joseph. We're about 12 minutes off the open. I wouldn't mind some input here from the community. Obviously, no attacks on that concept. He's not necessarily wrong. If you think about all bond inversion yield, so when we saw the US 2-year versus 10-year ever invert in the past, generally speaking, the market would make a new all-time high. Then the market would go on and it was like, everything's all good, it's all great. And then we'd have a really bad crash. I'll tell you this, Joseph, if we end up getting out of this problem and this market ends up going up, the lingering issues that are there, which will be forgotten in 12 months, 18 months time, if you see if we get a new high and you see bond yield inversions go 50% of all yields inverting, oh, wow. We are going into an epic crash. You will watch and it will be horrible. It will be bad, really bad. Like we're talking like possibility of some kind of Great Depression, because what that will mean is that we averted a housing crisis and that we will go into a housing crisis again. Because especially at the same time, if that did occur, housing would continue to go up. Obviously, that would be so bubblicious. So it's possible, but I don't know if it's probable at this point. Yeah. Look, statistics would be on your side for that type of thing, but we're in a different time here. And the only way I could see this market making an all-time high at the moment is that China opens supply. And if they do that and they say, guys, don't worry, COVID zero policy, it's gone, it's all good. This could happen in October, by the way. I believe there's a meeting in October where it all goes down in October. So October. And if we get supply back online, there is a possibility that the US and all of the rest of the world will actually avert and possibly even inflation comes down. But there's so much negativity in this market. If we do end up making a new high, wow. Neo. Do I dare look at a stock like this? Let's have a look at where Neo is. Oh, okay. I haven't looked at Neo in a while. It's not as bad as I thought it would be, but it's not good, is it? What was the other one? There was Neo. Was Neo the one that was owned which is the one that was owned by like GM for a minute. Wasn't this stock, I don't think. It was the other one. Someone give me the code. You'll know what I'm talking about. Neo just looks like a W, still going into resistance. I personally, if you're in it, I mean, you wouldn't be worried about the current price action, but I wouldn't touch it anymore. That's just my personal opinion. But if that market made a Riven, is it Riven? Or was it NKLA? That's the one. Thank you very much. It wasn't Riven. Oh, I forgot about this one. Oh, I forgot even how high it got to. Here we go. Dun, 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 dun. Does anyone have a Nikola share sitting at like $100 or whatever it got to? Anyone got one share at 92? Oh, never do that again, guys. If you get into these, get your money at least get your money that you put in out. Oh, no. This will happen again. Don't worry. It'll happen plenty of times. You'll see this. If you stick around for 10, 15 years, you'll see this. Look at 3D printers back in 13. Look at marijuana stock back in whenever it was. Lithium stock back in 17. It always happens. A little sector will become hot and this will happen. Or just look at any IPO hood. And then that happens to you. My friend bought Nikola at 70. Yeah, these stocks, no. That's a dog stock, bad stock. Don't want that. No good. 7 minutes till the market opens. Obviously, at the moment, we have the Nasdaq continuing to outstrip the US 500. It looks bullish here. Unfortunately, the pullback, if it does happen, could be quite severe because, of course, all of that rally that we left from the other day. We'll do the indices again in just a few seconds. Let's scroll down. Are there any other stocks that we really want to look at together? We had some requests here. I think we had Uber. I haven't looked at that stock in a long time. Let's check it out. $23. My personal opinion is I don't see how any of these particular stocks are profitable or good. I don't like the industry either. I think it's just completely, until you get automation, which I can't see happening. I cannot see happening. And I will say this, if anyone owns a Tesla out there, the phantom braking is real and it is really dangerous. I was driving and it was just like bang. It almost got me rear-ended on the weekend. The Tesla phantom braking is so bad. Wow. So if you think the old automatic stuff's coming out, I hope they're upgrading that sometimes. Because, yeah, for this stage, I just don't see how this is a better buy than you can buy quality right now. I mean, we've got quality out there. A little bit of a breakout, though. So you're looking for gap fills. It is behind the market. So, yeah, I guess that might be your argument, but I don't like it very much at all. But, yeah, you've got quality stuff on 2018 prices. There's your W. You know, you've got your Googles. Obviously breaking up to the upside here. Potential. Apple. Barry will be going against you. It sounds like on that one. You got my favorite stock in the market, the Microsoft. You know, still fairly deep in discounts here. That's just the FSG thinking. But yeah, it almost got me absolutely destroyed. There was nothing in front of me either. I don't know. Everyone reports it. I don't know if it's only the ones that are coming out now. But since they changed those Teslas, most people that are driving with it, yeah, it literally brake checks people behind you. Anyone that has a Tesla and they've used it, they'll know what I'm talking about. The new ones, 2022, 2021 ones, they'll do that. That's correct, Peter. That the point of the driverless taxi, you save the wages of the taxi driver. Yeah. Well, once you get rid of the wages, which is the biggest problem to all of these delivery services, you end up becoming profitable. At the moment, they're just trying to scale. But these are not the businesses that you want to be buying. If anything we learned in 2020 and 2021, or any of the old school kind of investors already tell you, is you want a really good core underneath the business, like good earnings, good multiples, ideally low costs, and as much potential as possible for AI. But that the potential for AI benefits other businesses just as much. I like Microsoft the most. I mean, it's my favorite company. Kevin says I break test people without FSD. Yeah. How's the cards? Great. It's really good. Really great build quality coming out of Shanghai factory. I bought the Model Y instead though, because I think that's going to be a little bit better. But yeah, I'm a convert. I'm a sick convert to the Tesla brigade. I do like them. Yeah, I do. I like the minimalism, but I've always liked Apple from that reason. All right, here we go. We've got 3 minutes till the open. Let's get 2 charts up. Thank you very much to the 1,371. Whoa! 1,371. Damn, guys. Thank you very much for joining us today. That's a very strong number, so I appreciate that. We're also getting in on a big number here for the channel, and I've got to say thanks to everyone that's been with us since the start. We're getting close to 100,000 subs, and that was a dream of mine. Like, when I saw YouTube in like 2005 or 6 or whenever it came out, something around that period, I remember watching it and I thought, this is cool. And then I never started one. And I thought, and I did a Twitch instead back in the day. You'll never find it, don't worry. And yeah, and that was the thing back in 2010. While in between trading, I was Twitch streaming. but nowadays, I've got to say it's been pretty awesome. So thanks so much for joining us. Here we open at 39.27. We've drawn a bit of an area up here, a bit of a box. This is based on the gap. So we'll actually use the SPX here so you guys can see it. This is the downtrend scenario. Basically, it's the most solid scenario I can think of right now. If you want to know the money flow currently, we have seen the flow go from huge amounts of shorts to reduction here. So they reduced shorts here. It's mixed at the moment. I believe this weekend's video that I'm going to create here could be very, very pivotal from the aspect of what we're about to see, whether Wall Street really want to buy this dip or whether they're just ripping it for another sell-off. If we don't end up shorting into it first, these are the kind of levels we're looking at. So we've got 1 minute till the open. A few people have been saying the World Series in crypto trading. Yeah, what is that anyway? We did, Bernardo. Don't worry. We looked at the 2-year and 10-year before. We looked especially at the 2-year. So here we go, guys. We're about to open here for the Monday session. We're unfortunately in the middle of kind of nowhere land. I could see people trying to make the bear case here for the session. However, the problem is we are still in an uptrend. You'll notice the series of higher lows and higher highs. There's no reason at this stage to say this thing's going negative just yet. I'm aiming for it to hit this level ideally. And if it did, we'd fill the gap and we'd allow the potential of some nice structural short happening there. So we open here, ding, 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 ding. We open the market 0.5% up for the US 500. Not too bad. Pretty strong. Left another gap. You probably would see that fill here in the start of the session. I doubt that little gap could be sitting there for too long. You'd think at least that one gets filled. So small gap here between the previous close and open. Imagine if it leaves that and it just flies up here. So likely at that point that we come down for these. So maybe you prefer that, but it's not easy to get in if you're not already in these areas. Where would you expect the little short to come in? About here today. So that's sitting at around 39.42. If you're a scalper, that would be the area where you could kind of say, well, maybe there's a little bit of this and a little bit of this, and then I look for a little long. And if you want to get fandangled with it, that's the type of concept I'd be playing with, and then find the triggers using your system. Obviously, this is not advice. You're just thinking about this market these kinds of ways. At my point, I prefer it to just wait for it to get to these levels. And if you have leftovers from last week, I mean, yeah, descaling them is the way to go. Ulrich here says it's a competition for big trading teams to enter and compete for some big prize pools in crypto. How do you win that right now, Ulrich? How can I win the crypto challenge when it's in the middle of nowhere? I tell you how you win the crypto challenge, Ulrich. It's pretty easy. Insider crypto information. Come on, everyone knows that the crypto challenge is going to be won by somebody that knows something about an announcement. It's got to be like that. Yeah. Going down, people are saying. Yep, little bit of reduction. Let's go through some of the stocks. In fact, I actually want to look at this more so than anything else. Let's have a look here. So biotech down 0.08. What's the strongest sectors? Oil and gas. Gas has the strongest buys in it, and oil, which does make some sense. Internet direct marketing retail, another strong day for it. So it's done 11.532 over that many days, and it's got another rotation in it. Notice these ones tend to hold up for a few days. So someone mentioned Chewy before, yes, and you can see here all of these stocks, Waiter Holdings doing the best. 13.84%, boxed 23.7. I don't know if that's the updated number, but yeah. So all these internet direct marketing retails doing pretty good. Gas. What else had been rotating pretty well here? Media service stocks. TripAdvisor and stuff. Yeah. They're not really finding it today. So it just seems to be the gas is kind of the bigger play here. We had semis before as well, out 0.36. I do think semis are behind the rest of the market. Show you using this chart. Maybe it'll make it a little bit easier here if I use this chart. Go back over here just for a moment so people can see it. Gap about to fill on the S&P. Watch this zone here today if we do get up to it. Here we go. Let's watch how the gap fills. Let's do a little 5-minute here. Okay, we'll get a month chart so you can see the differences between the sectors. This is the sectors here of the market. This is 1 month chart. So you can see solar's come back the best. Solar's actually got the best response over the last month of trade. Semis sitting behind here, 8.32. Gold, materials, metals, and energy. So all of these inflation stocks suddenly taking a massive dive, which is why you've got those tech stocks doing better. But semis negative 8.32 versus tech negative 2.22. So yeah, semis are super behind. Let's look at the last 5 days of trade. Semis still behind the technology by 2%. So if this has got legs, semis theoretically should be the ones that partially recover. On the day so far, semiconductors holding barely. If we get the turn, maybe that's one of the strongest sectors. So it's energy out in front. TAN, another strong day. Semis here holding as best it can. Everything else kind of slightly down. So gaps filled. Market now showing flat for the SPY. 39.07. SPX actually down slightly. MU is at like a 6 PE ratio? Yeah. Young Buck says market is on crack, to be honest. Yeah, the market is certainly very, very aggressive with its moves, but this is the nature of bearish style markets. They have monstrous rips and then we get caned. Square, yeah, Square's had a pretty decent resurgence on it. Chris? China's still ripping. Yeah, so China's another interesting market here. QQQ's the one that we've been looking at, and it's doing really well. It looks to have based in some ways. I mean, it really is down heavily though. So if you look at the QQQ, even compared to the US, like you think about the percentage down for this market top to bottom, it fell 63.57%. So it's underneath 2020 and even further. So 63.57%. For that to have happened in the US, can you imagine what you guys would be doing right now? That's another 30% basically on what we've just seen. 63% down. And it's not even unparalleled, because there have been points like this point over here. We saw also huge dumps in these markets. So the Chinese market's a totally different market. It regularly has 40% swings. The Shanghai composite actually fell even worse. Like the Shanghai composite still never has recovered, and it might take a very, very long time for it to recover. It's 2015. Unfortunately, I heard some very bad stories about what happened here to people, but this is a cataclysmic drop off. This is the type of thing that people are talking about for the US, but 50% down. And then, of course, what's happened since then is certainly no recovery. 33.79. So index investing is all great until it isn't. And all markets show this. I'll show you another one just so you can see it. We'll use XJO, which is my Australian market here. So the Australian market, if you go back in history and if you've never looked at it, that looks bad, yeah? But when you really compare it to the previous history, this is the high that was formed before the GFC, 6,800. It took over a decade to get back to 6,000, to really that level again. So it can take some time for these markets. And of course, the king of all of them is the Nikkei. So, or the Nikkei, this one here, just unbelievable how long it was never recovered. You know, for anyone that doesn't know what Japan did in the 90s, history lesson for you all, always beware the vertical, yeah? It can happen today because we saw it happen in 2020, and it can happen again. The vertical, if you invest at the top of the vertical, unfortunately, it just doesn't ever come back. So that's what they call the lost 2 decades, not just the lost decade. S&P 500, we'll look at the 5 minute. Let's have a look at the 1 minute chart. If turnarounds are going to happen, might want to try to do it here. Let's take it. Let's just go here to the one charter. What do you guys like about the stream as well? Would you like me to bring in more macro stuff? I'm happy to discuss more of those things with you. We can do more. I mean, at the moment, we're kind of light on for the stocks. The reason why is because we just don't want to be picking stocks right now unless you're investing in them, because there's just no reason to do that. If we look at here, just show you a couple of things that are in our Discord community. Click on the link in the description if you're interested in joining the Discord community. A few good shares in there. Here's the bear market compared to other bear markets and the speeds over time. You'll notice some of the original bear markets were very fierce, even in comparison to now. Some fierce markets there. So I guess the most correlated so far probably is something in the 37s or something like that. 1937, 38. Some people are correlating to the others. It's kind of in the pack between some of the other bear markets from that action. This is funny. Check this out. This is a cool chart. Stocks work best at night. That's a cool idea, isn't it? So to explain this, how interesting. So this is the overnight move. So the fake market futures move versus the intraday move. Check that out. That is hilarious that it's all overnight action. Isn't that funny, guys? And the reason why is because the market is opening with bullish intentions, and then it's got to come back and gap fill. and then it goes back up. So with this stat, what would be captured is generally this component being the overnight. The real market comes back, grabs the liquidity, grabs the orders, and then pushes it back through. What a compelling chart that is. My goodness. Tom, what's your analysis on the Nasdaq? Are we really in a bubble? Yeah, I mean, we have been for pretty much since the GFC. The question is, though, whether the bubble really needs to pop or not. It's more just about Schiller. I mean, Schiller PE is really the best kind of markets. You have valuations that are a bit lower than they are now, that's for sure. Yeah, this is correct. Asset managers are the lowest they've been in a very long time. This chart's always very compelling, I think. Asset managers compared to previous times. And this is what makes you think, well, maybe there is a bit more of a rally here than others. Historically, when asset managers have gotten to these new record lows or really low points, there's been a turning point. This is net of buys and sells. That's very important. Asset managers are just basically lowering their buys. Last week, they actually rose slightly in buys, but the shorts also rose. So what that's like doing is it's basically counterintuitive. They bought more, but then they shorted more. So what's the net figure going to show you? Neutral to down. Neutral to down. Go back over to the market, now down 0.07. New low, by the way. So that just broke through that little level there. So this was the series of higher lows coming in. We are in the middle of nowhere land. So we're at that previous little bit of supply. So this is, if people are feeling short, this is, I guess, the level for it to short off. Where are the buyers going to really be here? Most likely down here. So unfortunately, there's a lot of blank canvas for them to work with. So shorts coming in, possible rally here early, and then maybe a dump off. This is the hour of power. I don't really think it's a strong trade day today, but if you're feeling short, then that's a pretty big thing there. The problem with the printer, young buck, is that the more you print, the more you create. Anything can really start to affect it. Yeah, anything can start to affect it. That's correct, Kevin. Real estate is the biggest bubble in the markets, and that's always what truly begins a mega crash. So the stock market is saying we're not happy with the economy. The question, if you want to know whether we're going into a deep recession, is if the housing market gets crunched. So anything past, let's say, probably 20% down in housing, where we're going to doomsday preppers at that point. We'll have to go hide we'll go hide out the back in the sheds and build zombie apocalypse machines. Relief rally over. I'm not going to call that yet. No. Even the market could come all the way back down here and I still wouldn't say it's over. The key is to be patient enough to recognize that at this stage, we have a gap left here. We obviously just have this Monday morning. Retail comes in. They get really excited. There's 1,350 of you guys out there. You're like, yes. It's probably 10,000 on a few other channels. Who knows? And you're all ready to get in on the action. Some Mondays just aren't that great. And this is one of those ones where I know you can make the bear case scenario. I think that's probably the only case. I prefer personally to go with the SPX and to say, where are my highest probabilities? So your highest probabilities are, a potential short here down to here. If the risk reward is there, that's worth it. The long from this area here back up into here. And of course, the short that's in this area here towards the downside. They're my favorite levels and my favorite zones. And I always have the patience to sit it. Would I personally short this? It's not my style so much, but of course you can. And there are ways. We talked about it at the beginning and we spoke about that little 5-minute switch. I don't know if it's going to be that strong though. And that's what I like to know, or at least have confidence. And the problem is when you lose your confidence or you don't really feel it, you're not going to hold it to its eventualism. You remember this one thing that I teach a lot of people, and that concept is this: if you buy a trade here, and your plan, and I'll ask this to the chat, your plan is to take profit here. Yeah, we're going to take profit here, guys. We're feeling good. We're going to take profit here. If your plan is to take profit here, and you stop the trade here and you exit early, did you fail or are you successful long term? I'll read some chat while we're doing this. Donkin Dave says he's ready to raise chickens for the zombie apocalypse. That sounds good. That's correct, Spyburn. Lots of people get excited and overextend with super low mortgage rates. Always the way. Housing market is, in my list of markets, I rate them like this: 1, 2, 3, 4. First market, I think the smartest, hardest trade in the world is actually the metals traders. Second market will be bonds. Third market will be stocks, what we're talking about right now. In terms of foresight, it doesn't mean that people don't make money in the other ones, by the way. This is a ranking of the foresight and the just difficulty component of being exceptional in that field. Then we'll go to currency. And if you want to know about where property is, it's down here, number 10. In fact, if you know a lot about the markets, property can be one of the best investment tools. And the reason, and you might say, well, that's insane coming from someone that's talking about stocks, currencies, bonds, metals. Yeah, but property, people just FOMO, man. That's what they do. They just go crazy. They jump in. You've been to auctions. You know what happens. So property is surprisingly easy to predict from the action of interest rates. It's very susceptible to it. So let's see if we've got any answers to this one. And David Taylor has it. He says, you fail, not repeatable. That's correct. So a few of you are saying it's still profit and profit means success. The problem is that you haven't executed your plan. It's kind of like half executing something. It's like you open a YouTube channel, you get to 10,000, then you give up halfway to 100. You know, I wasn't going to give up, guys. You don't give up. You've got to keep going. I grind every day, get videos out for you guys, and do all of that type of thing because, well, firstly, I love it and I appreciate everyone out there. But secondly, you've got to do it. You don't give up. Yeah. When you give up, you fail. So the problem with trading is it's all about this one thing: replication. It's a business. That's what it has to be treated like. If you can't replicate your trading system, I don't know what you're going to do. It has to be replicatable. So you can do it 1,000 plus times over a couple of years or even over a year, and that you know what your stats are long term. It just makes sense. If you can't replicate the decisions that you're making all the time, how are you going to make it long term? That's an argument I would always ask people. That's why you've got to build systems that based on stats, based on, you know, a mixture of tools that you can repeatably use. That's correct, Jeff. Property equals leverage, which equals higher gains. Yeah. And Bobby Chang brings up a good point. You could take about half if that was your plan, of course. Think at 79, repeatable results are very important in trading. Yeah, for sure. Stops will rip at 10 a.m. Yep. Retail hour or first half an hour of power is over. So possible weakness into that strength. Yeah, that's for sure a possibility here. So the big markets, let's have a look here at all the stocks. I want to bring up the sectors again just so we can check out those percentages of movement here in the market open. So gas is holding quite well. Little bit of defensives. Obviously, anything to do with the kind of tech sector stuff, they're all down. Semis down, but not down as hard as some of the other tech sector stuff that's going on. And this can help you just to get a bit of an idea. Look, if it turns, what's been holding the best? Well, it seems like Wall Street's still liking gas here, even with this market pullback. And maybe semis have the stronger base in them if the market does turn towards the bull side. That's the type of thing that you want to start thinking about. Probably a good idea, Matthew. Yep. Kevin says, start to not try picking tops and bottoms. That's cool, man. That's great concept, Kevin. Get the fat in between. Yeah, get the like. There's a cool theory. Let's see if we can. We'll just draw it here. It's a really cool theory, and maybe we'll leave the stream with this cool theory. The theory was Dow theory, if you want to look it up. And basically, Dow had like Wyckoff, he had many different stages of markets. He effectively had like a start, a middle, and an end. And usually there was kind of some kind of action that goes on here. He had two concepts. He had the concept of what you want to be in, which was public participation. And if we're in public participation or participation area, we get a lot of the move. That doesn't mean you pick the bottom, and it doesn't necessarily mean you even pick the top. You grab the middle section. That's what replication is. We want the middle section. When you think about a trend running and you see it coming off a base and you go, oh, I see that base. The problem with human psychology, we want the low price. But actually what you should be saying is, I see what you're doing here, you sneaky, sneaky people. I'm going to get involved in it. And what you certainly don't want to be doing is getting into excess. And you can always tell excess because it'll be giant candles. All right. That's a big hint of excess. Big, giant psycho candles. And when you see psycho unusual candles, it's not that hard to check on a chart to see psycho unusual candles. If you go back over to NKLA and we look at weekly, I mean, psycho unusual candles aren't going to be that hard to see, are they? Now, you'll never, if you're going to hold these types of psycho unusual candles, even this one here, these are very, very tough. This is just an example here. But there are other stocks that go into these blow-off phases in a much bigger way with much better quality kind of positions. So psycho candles, a big reminder one would be mRNA, where it when it went ballistic up, and it, of course, then crashed down. That was a huge candles that we saw up here in terms of percentages. So remember when this happened, we got these really big ones. That usually means it's in blow off excess. Look at the NVIDIA chart. Yeah, NVIDIA was another classic case. No matter which one you've got, you get these really big candles, unusual size, kind of like that 22%. Tesla's done it plenty of times. Tesla, the big candles, the gaps in between. It's unsustainable. I'm not here to prop you up with, oh, these things. The other teller always that markets are ending is when everyone starts going way out noxious in terms of YouTube. So you'll be here. Someone will say, oh, Tesla to 5K. And if you see enough videos that say Tesla to 5K, might be paid to scale back your positions a little bit. Yeah, that's usually the way here. So markets have recovered somewhat. I'm still relatively bullish. I'll leave everyone that's coming in here just with this kind of concept. Remember, at this stage, we do have a downward trend. It is intact at this point. It makes sense because the gap is there. This is the general philosophy that I would like to see Wall Street do this week. Now, however it gets there, that's a big thing. We do have a public holiday, obviously, next week for the US. That's going to mean that usually, we're give or take, that oftentimes you will see bulls into public holidays. Now, things have been not playing necessarily the stat game as much as they did, but I could see the market coming up here. And make sure, if you're a new member, if you've ever come into this channel before, subscribe, because I think this weekend could be a really decent video that we're going to bring out. So look, guys, I want to wish you all the best of luck this week. If you haven't ever checked it out, always come and consider joining us over on the Discords, whether you join the public or the private community, doesn't matter too much. Obviously, we love to see you in the private community. Do remember we have a schedule of all these other streams that we do. If you enjoy the streams, they're faster, there's more content. You can enjoy it over a coffee or whatever. So you can come in. We've got about many members in there. And of course, we have a strong community. Let's give a bit of a shout out to some people in here that are currently commenting. They're on YouTube. Knave of Diamonds, I see. Mad Max, Hot Potato Trader, quite a few of the people in here constantly sharing great ideas. So Alan, Shogun, so many others. I'm going to miss heaps of names, but there's a lot of guys sharing ideas all the time in the public community as well. Some excellent economic charts. Often they're in the videos that we do, so you can come and check them out. And of course, add memes. We need memes every day. Give me as many memes as possible. So if you're interested, you can join a free day, 7-day free trial down below. Otherwise, you have a great week. Watch the videos. We'll see how everything comes out. And thank you so much for getting us to 100K. We're going to get to 100K. I hope that's going to be amazing. Aussie Cobber 71. Wow, you've been following me a long time, Aussie. I appreciate that. $5. I don't know how you're still up. Thank you for another awesome live stream. Have a coffee on me. I will tomorrow. I will. Thank you. I'll have an espresso shot. Thank you, Aussie Cobber. Appreciate that. I miss Tesla Harry. You're an old school person if you know who Tesla Harry was. See, Tesla Harry was right. Remember? Tesla Harry. That was the poor guy. If you're there, Tesla Harry, come out. You were right, okay? And everyone that hated on you was wrong. So the story before you go of Tesla Harry was, remember this? So Tesla Harry came out and he's like, buy. And then, of course, Tesla kept going down. And by the time it got down here, poor Tesla Harry was getting harassed by people in the community. it was like, because he was so uber bullish on Tesla. And unfortunately, he left us too early, because Tesla Harry could have been there to ride the storm of success and really give it to some of the people community. He would have said, you know what, you all suck and I'm correct. But we never know what happened to Tesla Harry. He's somewhere out there. Hopefully he got out of Tesla at the prices up here, and he's living the good life on some island out there. He was an investor. Yeah, I know. Tesla Harry's been replaced by Tesla Tom. Yeah, I know. I end up buying a Tesla. Hey, pretty funny. Poor Tesla Harry. Yeah, he's poor guy. Gone but not forgotten. Yeah. There's a few other good peeps around. Sandola, plenty of others. Thank you so much, guys. You have a great week. I really hope you do the best possible. And I personally wouldn't mind for the market to have another nice rip, get us to these resistances, and then we'll find out whether the market means real business or whether it's just another nasty, sneaky trap by the street. Bye, everyone. Have a great day. See ya.